The economy is going gangbusters on steroids. We've got a stock market that could be up 16% in 2021 if you believe Goldman Sachs. And Paul's got some news about Woodside and the banks. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Okay, well, I would interview myself, Paul, but you're the one who thinks economics is boring.
Well, I do think economics is boring,
me.
But you're the person who can make economics
Exciting.
marginally interesting. So here you go, Peter. Make economics interesting for the great unwashed out there.
Okay, so if anybody wants to think there's doomsday merchantsville in 2021, you better forget it. Right now, consumer confidence is now at a 12-month high. Business confidence is now at a 30-month high, and business conditions, what businesses are saying about business right now, is at a 20-month high. All those three numbers are bigger and better than before the coronavirus came to town.
the economy is going gangbusters, right?
On steroids.
On steroids.
And what the important part for us, if you want to make money out of all this, is that it's great for jobs, it's great for stock prices, and it's great for our superannuation. So all the people who took their money out of super will actually see their super go back pretty well in 2021.
Well, markets now up for the year, Peter. That's the positive. That's net up.
Yep.
Some of the stocks, though, I mean, I've been a bit surprised by stocks like JB Hi-Fi continue to be solid.
Buying
Don't
opportunity.
understand that. I reckon consumer sales are going crazy out there,
They are.
Peter. But
Yeah.
we're in for a really strong Christmas. It's going to have a really big impact, a lot of the consumer discretionary stocks.
Yeah, and
right?
Paul, people kept on Sky News this morning, I was asked, what stocks should you buy? I said, well, in the first phase, it'll be stocks favoured by the reopening trade, but great stocks like JB Hi-Fi could lose some supporters, and then you can buy them. So I think there'll be a rotation back and forth between the stocks that used to do well during the stay at home, then the reopening, and then the really good ones like JB Hi-Fi will be buying opportunities. Up goes the market. Next one, Paul, we're talking about Goldman Sachs. A 16% rise in the US stock market in 2021. That came out a day ago.
And now, that's an upgrade, right? You better explain that and put that in context, right?
Well, they thought it was 8% would be a reasonable call, but because of the vaccine news coming through thick and fast, Bill Gates from Microsoft on CNBC yesterday said there will be 6 vaccines in the March quarter, which will help not just the US, but lots of countries around the world, means the global recovery comes back quicker. And so Goldman Sachs has gone from an 8% rise in 2021 to 16%.
Now, we know the history of Democratic presidents is pretty good for markets.
Yeah.
What's the history of the first year? That's
Terrible.
Terrible.
Yeah, it's the worst year.
This 16%. I mean, like, let's just got to be a bit careful of that, don't we?
But I can trump that, Paul.
Yeah, you trump it.
I'll trump it.
Donald can't, but you can.
I can trump it because the first year after recession is usually a very good one. So the badness of a presidency, if such a word exists, is trumped by the first year out of a recession. Phil Riven from Ibis World, great research company, he told me way back after the GFC, the first year after recession in Australia, our market goes up anywhere between 30 and 80%. We're up about 47% so far. So who knows? Could be a big one for us.
So this will actually make it still about a 12th or the 13th year of the bull market, though. So put that in context. And we still have to get through the Georgia Senate election. So a bit of negative there, but take your point about being trumped.
Yeah, I'll throw one thing in. You might say it's a 12th year of a bull market, but there was a bear market in the middle of it. Remember? The coronavirus.
Yeah, close run thing. Net, the year's up, so I don't know whether it's a bull market or not.
All right, next one. Paul reckons he's got something interesting on Woodside and banks.
Two pieces of news out. Let's start with the Woodside news. The CEO, Peter Coleman, was leaving after 10 years, not going towards till sometime in 2021. Woodside's got some big decisions about Browse and Scarborough about whether they invest or not. Look,
the share price is going up at the moment.
Share price is going up. I don't think that's a negative. As long as the transition's right, I think you can put that one away and just say, let's give the company time. If he leaves in a month's time, different story, but it's late in 2021. They can make a transition. A big challenge for Westpac. Always been the gunner company, I reckon, Westpac. Sorry, Woodside, gonna do great things. Still has never quite done it, but let's give them some credit and hope that transition works out okay.
You mean Woodside?
I meant Woodside. I said Westpac, the W is getting confused. Now, back onto the banks though. We've got APRA announcing some draft changes to capital ratios. Net, this is neutral for the banking industry. You'll see some reports about this in the press today. Essentially, it's changing the amount of capital that banks have to put away on riskier loans. So it's good.
Less or more?
So more on riskier loans, less on less risky loans. So for example, on a home loan, looking at the LVR, the loan to valuation ratio, Once the ratio is above 80%, the banks have to put more capital behind the loan. But when it's less than 80%, they'll get to take some
So
away.
if someone comes in with a 78% LVR, that's going to see it as a safest kind of loan. Anything above will be a riskier loan, more capital put aside.
Overall, it's good probably for small business. It's probably also marginally positive for the minor banks. The regional banks will benefit. So
and great quality borrowers will probably get more money.
Yeah, and of the losers, maybe Westpac's a little loser. So we saw a bit of a reaction yesterday. I think this is still doesn't take effect till 2023. It's still a long way away. The market will sort of gobble this up for a couple of days and then lose sight of it. Right. So look, don't have too many
The people out there want to know: is this going to hurt bank share prices?
No, look. Overall, it's neutral on banks. It's probably a positive for, as I said, the regional banks.
Okay.
And a little bit of a negative for a couple of the majors. But overall, it's neutral for the industry, and banks are more and truly capitalised. We're going to start to talk about banks handling capital back. That's going to be the next phase in the
bank
banking
share price and dividends are on the way up. If you believe my boom story on economy,
go the Aussie economy, right?
Yeah, exactly. It's really boring, Paul.
It is boring, and you made it interesting though. I'm boring out.
I'm mad about money.